words are what we await from two investment gurus and two investing students. Raamdeo Agrawal, the Joint Managing Director, and Motilal Oswal, Financial Services, has just returned from the Berkshire Hathaway annual general meeting, where of course he heard the sage of Omaha, probably sat at his feet and learnt a great deal of lessons. For those of us who are not very fortunate to attend this, perhaps the holiest of holy places for investing, Raamdeo Agrawal is going to give us an aankhon dekha haal, a ball-by-ball commentary of what happened over there. Raamdeo, thank you very much for dropping by. We are really eagerly looking forward to this conversation. Why don't you begin by just telling us how the ambience is, what exactly happens, how long is this AGM?
Yeah, but Lata, this time it was streamed. They had, I think Yahoo Finance streamed it, and a lot of people they saw it, and I believe it was presented very well, because they get the, it's like watching IPL from stadium and watching on the TV.
Yeah.
So a lot of people prefer watching from the TV, because in TV you can see the ball coming and his face and his expressions and all. I was kind of it's a indoor stadium of almost 45,000 people, and it's almost full. In fact, this time little bit of that top end was not there. Instead of 45, maybe 40,000 was there, because because it was being streamed, so a lot of people might have not traveled.
Okay.
But it was almost full. Same, the thing. I think the first thing which happens in the morning is that they have 1 hour some kind of movie, and after that the old man starts. Mr. Buffett starts with the performance of Berkshire Hathaway for the quarter.
Okay.
So this quarter was, overall it was looking to be somewhat better, but his operating performance was kind of very, very weak.
Okay.
So 15-17% lower than last year in the operating level. If you include the investment income, then of course it was positive, 8-9% positive. So I thought his sentiment will be somewhat lower because of performance, but I think first half was kind of a little dull. Then actually it was the last 3 hours, after lunch, after 1:30. That was very good.
So
a lot of investing thinking.
As an investor and a keen market watcher, what was the biggest takeaway for you from that speech?
Yeah, so I was just looking to the notes which we do there. So one of the things which I was looking forward to was what is going to be the impact of negative interest rate. Because one of the biggest phenomenon today, first we saw oil. In last 2-3 years, oil has played out. It has come down to 25, 40, 45 and whatever. So but now the negative interest rate, so he said, he and Charlie both said that, it's the first time it has ever happened. Nobody has any history, and if you're not thinking enough about it, you're not thoroughly confused. So it's very big in the sense that what he's saying is that right now, worldwide, right now what valuations you have, 18p, 20p, it is with the belief that long-term interest rate is 4-5%. Otherwise, reverse of 100 is, so if it is 1%, 2% permanent, so what he's saying is, if by chance investors start behaving, right now, say it has taken about this zero interest rate, about 2 years, 3 years phenomenon?
Yeah, zero interest rate is quite a bit, it's
like
about
when?
4-5 years now.
Is it 4-5 years?
Yes.
So now slowly he's saying that still people are believing that it's temporary, someday it will reverse. Isn't it? Because we have never seen in our lifetime.
It will.
So he's saying that day on which you start believing this is a new normal.
Okay.
Zero interest is a new normal. Then you see the asset prices kind of going through the roof. So he's saying that today one of the problem is in US is that all the assets are being bid very high. Slowly cap rates in real estate is also going up. And hence assets are being bid up, because you can actually borrow negative or whatever, at 1%, 1.5%, 2%. If you can get 8-10% yield, say he has committed some $15-20 billion in solar energy project. So he said my IRR, including the tax benefit, is about 10-11%.
Okay.
Now, with his AAA position, he can borrow at 1.5%, 2% globally. So why would he not take that arbitrage of 7-8% and completely locked in? Banks are willing to give him long-term money for that kind of interest rate. So I think this negative interest rate, how it plays out, is going to have huge impact in financial products, valuations going forward. But nobody knows. If it becomes a 5-year, 7-year continued phenomenon, but it is one thing. But if by chance,
create a bubble, Raamdeo? Is that something?
So he's saying that right now it is not in bubble proportion.
Okay.
But it will create bubble. I mean, I think stage is set for some kind of bubble in some asset class. I mean, see, equity types of asset class are only two. One is equity and second is real estate.
Yeah.
So in which market? So last time since we have done massive, irrational valuation of the real estate side, my sense is the next round is only going to be equity.
So how will you deal with it in your own strategy that you take in many of your funds, etc.? As a retail investor who's watching right now, how should you deal with negative interest?
It's a global problem, and it is just something to be observed.
Okay.
Say like oil price coming down, it's a huge macro factor which you have, it is very important but not knowable.
Okay.
So just leave it on to itself. It's at least positive for the equities.
Okay.
Positive.
Did you worry about the fact that central bankers are running out of tools? I mean, negative interest rate. Now, where else can you go?
Yeah, so
did that apocalypse feeling worry?
So, they hate to discuss anything macro.
Okay.
This was the max they could go.
Okay.
So they clearly said they believe only in micro kind of discussions related to businesses and companies and all, but not so much about the macro, and they have no clue. Okay. And they have no interest. He says that at anything I'm willing to buy businesses, given at a reasonable price.
Raamdeo, one of the most interesting bits is one of the keys of successful investing is avoiding envy. What does he mean by that? I mean, what was your key takeaway from that statement?
He said that day before?
Yes, he said that. In your own context, I mean, how would you put it?
Yeah, so, envy is like very simple. I mean, you're making, say, 40% or you're double your money. I have done only 30%. So I should be happy with my 30%. I should not bother about your 100%. In fact, I should congratulate you that you have made 100%. I should try to learn how I can get one or two tricks from you so that my performance can improve.
We did speak to you earlier about what the FI mood on India is, and you did tell us about how positive it is. But was it very different from the last time you went to the Asia?
Yes. This time it's India is arrived.
Okay.
And like everybody is watching it. Lot of commitment, and India is focused. In fact, I was surprised. I was not hoping. I was thinking that again they are going to ask me what is happening to the government, what is why India is not growing, what will it take to grow and all. So it was not like that. They are all, of course, they are also waiting for the growth to resume. They are also watching the data, maybe monsoon or whatever. But clearly, one thing is that U.S. market is all-time high. So their base portfolio has done superbly well. And the kind of prosperity you can clearly feel in America, particularly in the financial markets. And the mandates are very big. I mean, millions look to be really small. You've got to talk, minimum denominator is billions.
So between last time and now, what is the why do they like India much more?
I don't know this time, but I must have met about 17, 18 investors between Washington, New York, Kansas City. I think it's all over. They don't know how to play it. The beauty is that they don't have people on the ground, and they're not made much money in India. But for emerging market allocation, they're clearly looking at India to be the foremost country. So I think we need to play our cards well, and we are entitled to get, or we will get, good flows in the days come. In the sense that I saw one of the funds, he was saying that he's going to get mandate for $2 billion. They got the mandate for $2 billion, it is going to flow. 30% will come to India.
Okay. Well, you have whetted our appetite. We're going to take a break, and we're going to come back with lots more questions on this, what you learned from Warren Buffett and what you learned about India. Back in a minute.